Most traders look at candles as nothing more than price going up or down. But here's the truth. Almost 80% of people completely miss the story that every candle is actually telling. And because of that, they either enter late, chase moves, or get stopped out without ever understanding why the market reversed. But in this video, I'm going to break everything down for you. We'll cover what candle range theory really is, how to spot it step by step, and how to use it across different timeframes to find high-probability setups. Stick with me until the end, because I'll also share an advanced way to combine CRT with order blocks and session timing, something that can take your trading precision to a whole new level. And just so you know, on this channel we don't only post trading education. We also share daily signals, one-on-one coaching, and the DTC trading bot for traders who want to take this knowledge and put it into real market results. You'll find all the details linked in the description. Now, if you're ready to start reading candles the way institutions do, let's dive in. Let's start with the basics. Every candle, no matter the time frame, is just a range. It has a high and it has a low. What's inside that candle, if you zoom into a lower time frame, is the battle between buyers and sellers. For example, a single 1-hour candle can contain 12 5-minute candles. Some of those smaller candles may sweep liquidity, consolidate, or push price. But when you look at the higher time frame, all you see is the high and the low of that single candle. This is the foundation of CRT, treating each candle as its own range with structure inside of it. The market often repeats 3 clear phases within these ranges. They are accumulation, manipulation, and distribution. Accumulation. This is when price consolidates within the range. It looks slow, almost directionless. Manipulation. This happens when price sweeps liquidity, taking out the high or low of the range, usually with a quick wick. Distribution. Finally, the real move begins, breaking out of the range and continuing in the true direction. This 3-phase cycle shows up over and over across all time frames, and CRT helps us recognize when we are moving from one phase to the next. Now let's look at the most common CRT setup, which often plays out in 3 candles. The first candle sets the range. The second candle sweeps either the high or the low of that range. The third candle breaks out, showing the true direction. This doesn't mean CRT is only limited to 3 candles. It can take more. But the 3-candle version is the cleanest and easiest to recognize. Quick pause here. If you're serious about avoiding these mistakes and want tools that handle the heavy lifting for you, we've got exactly that. The DTC bot has generated close to $45,000 in profit over the last 3 weeks, trading the top 5 pairs. Alongside that, our daily signals delivered more than plus 5R in the same period. And the best part is, nothing's hidden. We post all the results inside our free Telegram channel. You'll find the link in the description if you'd like to see how these strategies are being applied live, every single day. All right, let's get back to the video. The real power of CRT is when you combine multiple time frames. You can use a higher time frame candle to identify the overall range, then drop down to a lower time frame to refine your entry. Here's a quick framework you can use. Monthly range to refine on the daily. Daily range to refine on the 1-hour. 4-hour range to refine on the 15-minute. 1-hour range to refine on the 5-minute or even the 1-minute. This top-down approach keeps you aligned with the bigger picture while still allowing precise entries with small stop losses. Let's apply this to an example. In this gold setup, the 1-hour time frame is where the foundation of the move begins. Around 6 a.m., we saw a clean range formation. Dropping down to the 1-minute chart, the market provided the manipulation leg around 7 a.m. Price spiked below the range, grabbing liquidity from traders who had placed stops under the consolidation. This is a textbook liquidity hunt. The market engineered a false move to the downside, enticing breakout sellers, before quickly snapping back inside the range. Once price reclaimed the range, momentum shifted. The breakout occurred with a decisive close above the bullish order block that formed right after the manipulation. That's our confirmation candle, the point where we have both structure and order flow aligning. This is where the trade idea gets validated for execution. Entry. Immediately after the candle closed above the order block. Stop loss, SL, placed just below the recent swing low, which also aligns with the liquidity grab wick. This makes it a logical invalidation point. If price breaks back below, the manipulation thesis is wrong. Take profit, TP. First target is the high of the CRT candle, the candle that confirmed the breakout. This is a safe target and often gets tagged quickly. A more aggressive trader could scale out here and leave a partial position running toward higher timeframe liquidity levels. It's not just a random setup. It's a framework that repeats across pairs, sessions, and timeframes, because it's rooted in how liquidity and order flow naturally interact. Now, when it comes to managing targets with CRT setups, there are generally two main approaches: conservative and aggressive. Both are valid, but they serve different trading personalities and risk profiles. The conservative approach. This is all about locking in profits quickly and consistently. With this method, you set your take profit at the midpoint of the range. Why the midpoint? Because after the manipulation and breakout, price often retests or at least pushes back into that zone before deciding if it wants to extend further. By securing profits here, you're taking advantage of the most probable move, essentially banking on the easy money instead of hoping for a bigger extension. Typically, this gives you around a 2-to-1 risk-to-reward ratio. It's a smart option if you're trading during a quieter session, like late Asian hours, or if you simply prefer stacking smaller, consistent wins rather than aiming for home runs. The aggressive approach. This is where you're holding for the other side of the range, or even beyond it. The idea is that once the manipulation has cleared liquidity on one side, the market often travels to the opposite liquidity pool, which means much larger targets. With this style, it's not uncommon to catch moves that deliver 4-to-1, 5-to-1, or even more. It requires patience and discipline, because there will be times where price stalls or retraces before hitting your extended targets. This works best during major sessions like London or New York, when there's enough volatility and volume to fuel a full-range expansion or trend continuation. So ultimately, the choice between conservative and aggressive management comes down to your trading personality. If you like securing wins, reducing screen time, and keeping stress low, go conservative. If you're comfortable holding through pullbacks and want to maximize your edge when the market's moving, go aggressive. The key thing to remember is that neither option is better. What matters is consistency. Pick the style that aligns with your psychology and the session you're trading, and stick to it. That's how you build repeatable results with CRT setups. Candle range theory works on its own, but it's even stronger when you add Confluence. For example, combining CRT with order blocks for precision entries. Session timing, like the London Open or New York reversal. Liquidity zones or fair value gaps. These additional tools help confirm that the breakout move is backed by institutional order flow, not just random noise. To recap, every candle is a range with a high and a low. CRT helps us see how price moves through accumulation, manipulation, and distribution. The classic 3-candle setup is range, sweep, breakout. Use higher timeframes for context and lower timeframes for entries. Combine CRT with order blocks, session timing, and liquidity for the best results. This framework is simple, but powerful. And the more you practice it, the more you'll see it repeating across the charts. Don't just memorize the concept. Go back, study the charts, and train your eye to see these ranges play out in real time. That's how you build confidence and consistency. And if you want to take it further, whether through the DTC bot, daily signals, or one-on-one coaching, all the details and live results are inside our free Telegram channel. Link is in the description. Check it out. If this video helped you, hit like, subscribe to the channel, and drop a comment with the word CRT, so I know you're locked in on mastering this strategy. Appreciate you watching, and I'll see you in the next one.